here's Ken Calhoun live with the latest trading strategies for today's markets.
Hi traders, in this episode of Trading Television, you'll see another one of my all-time favorite strategies updated for the current markets. I think you'll be excited once you see how it works.
These are not trade recommendations, although I will be highlighting specific stocks that I am personally trading, as well as breakout triggers that I'm using. These are not to be construed as trade recommendations, and by participating in this event you hereby agree not to make any actual trades based on what's being presented here tonight, because all information is for educational use only. No profitability claims are being made for how you could do or potentially do, because trading involves high risks. Typical customer results are that all traders will incur trading losses and most do not become profitable, because trading is a speculative, risky, dangerous thing to do. So proceed with caution.
Hello traders, this is Ken Calhoun, president of Day Trading University, with even more winning trades, following up on my earlier correct decision to hold my FAZ and SKF positions overnight from Friday into the open here on Monday morning, April 19th, 2010. You can see the FAZ is now in the money by $171. Nice play. When do I sell? It's pre-market here as I'm recording this at just after 8 a.m. Eastern. It's 8:11 Eastern. Now it still looks like it's going up, right? So I should not be a seller. However, I'm going to sell this if it does what? If it starts to lose, let me pull this down here for you. This is the tick-by-tick advanced chart. If it starts to lose this 1255, okay, so I'm going to lock in the gain and I'm going to sell this into pre-market buying at the first sign of trouble, because I want to take this to the bank. So I have a sell limit order placed at 1253. So what I want to do is follow the tape. We're 1260, and instead of that big chart, I'm going to now tighten into this tick-by-tick chart. So I'm going to sell. Basically, my sell decision is, remember I've taught you in my other educational materials how to look for nickel support and resistance within moves like this. Well, I'm looking at the tape here to see if we see large numbers flip over to the ask, which would be a sign that sellers are coming in addition to a price drop, some price weakness if it occurs between 1260 and 1255. So far, it looks like it keeps going up, and so we're still in the money. If and when this continues on up, through each nickel, I will tighten in the trailing stop accordingly. But here, and this is a manual stop, I'm not doing this automated, this is pre-market trading here. I'm kind of skeptical about this continuing on up, so I'm going to tighten in a trailing stop here. I'm only going to give it a couple of pennies worth of wiggle room. See how the numbers on the right were starting to pick up? And we see a red candle, so I want to take this 170 to the bank, and I don't want to lose it. So I am going to go ahead and sell if it starts to lose the 60. So if it gets down to 59.58, I'm out of there. In fact, I may have to put my limit sell here at a couple pennies down in case it drops quickly. I'm going to cancel that ad out, and I'm going to just sell 100. Yeah, so it sold me the 100 out quickly. So that's another tip. Do it in 100. Close out that trailing stop because I'm no longer long. 200. I'm going to do 100 more to fill the remaining 100 shares. So I sold out the first 100 of the 200. So whenever you see consolidation sideways for quite a few minutes following a nice pre-market run up, that's usually a good sign that it's a good time to take the money and run, which I did. So it's a good way to continue on in our markets. And again, I don't need the charts to trade these. I need my P&Ls, which is what I use, right? And trade for money. The charts are there as a beginning guide to scanning, but to lock in gains, it's all worked off the money, right? So anyway, what I want to do is sell this if it starts to get under 1260. Of course, the risk I take is that, let's say it pulls back. I'm going to go ahead and sell that. Bang, sold that, and I'm going to sell this one too. So there we go, and yeah, that's the money for the pre-market sells. I will be trading these in and out all day, you know, in continuations and whatnot. But for now, it's a good way to start the day off with a few winning trades to sell the gaps up. Yeah, should I sell this too? Why not? Usually these things move in tandem, you know, in conjunction with each other. So I'm going to go ahead and usually have to drop it. By the way, limit order, I'm going to drop it a couple of pennies under what the inside bid is, just in case it drops between the time I enter that and the time I hit the T button. So I'm going to go ahead and take that to the bank. Bang, another set of winning trades. And we're in the money. Just so you can see here, there's my trades so far. That's $383 worth of winning trades, as evidenced here in selling these into the pre-market. Bang, almost 400 bucks on a Monday morning. Not a bad way to start off the trading week. Now, I still think those particular equities have a way to run the short ETF, so I will likely be getting back in on those on continuation moves, right? Because, like I posted earlier in the earlier chart, there's still plenty of upside. But it's always a good place to start off. Here's another quick tip. Always a good place to start off by locking in gains. That was one set of trades. Okay, that was a successful set of trades. I want to buy this again if it breaks what? New resistance over 1265. Okay, and this is pre-market. So what am I going to do? Am I going to start in on size? No. What I'm going to do is start it off. Each one is an independent event, right? You borrowing statistical nomenclature here. So I'm just going to buy 25. And I want to get in if it gets in. If we get over 1265, I'm going to use 1267 as the trigger. 1270 is the limit. So if it gets somewhere over 1267, I'm only going to buy 25 shares, which is about, what, 270 bucks worth of this stock. So hardly anything. I'm going to get in real small. If it works out, great. But if I buy and then it immediately goes against me, which happens all the time too, right? That false breakout is not going to make me shake out quickly, because I've got a lot of room to run before it costs me any money, right? And that's what it's all about, is keeping the dollar cost of your stops as low as humanly possible in pursuit of gains that stack up. Okay? This is Ken Calhoun, Day Trading University, showing you guys how it's done. Remember, in the part 1 of this video, I said that I would hold those 200 shares that I had from in here into the close because I anticipated a gap up on the weekend news, which was the case. And I sold right there because it's previous resistance and it was in the money. So let me take the money. That's why I trade, is to make money. And I will rescale into this on new high breakouts, which would be my preferred way to trade. I might short it if it drops down under the lows here. I'll trade it either way. And that's how we make money with our day trades, or at least that's how I do it. I hope you guys are doing great. And again, if you have any comments or anything, post it at www.tradingtalk.com. That's my forum. And, you know, get some insights on how a real trader works the mechanics of the market every day, because this is fun stuff once you get it. You guys have a great week and trade well. Thanks. Bye.